Hey everybody, welcome back. We have a ton to go over, but let's start with the basics. S&P 500 right in here. We can see our level really clearly. It's going to drop that pin right there, 4,200. That's really what we're dealing with right now. That's been our bane of existence. We keep riding it and seeing it's become support, which is nice, and now we have to see, is it going to become resistance? I really don't like today's action. I mean, I'm just going to get it out of the way to begin with, and then we're going to talk about it. I want to see something emphatic. I want to see a big run, and that's not what we got. What we got was really milquetoast, and you still have your DTL up here, downward trend line, and we still have the slope here. At the same time, you can see where you're kind of boxed in here. I'll draw them formally in a second here, but you can see what I'm putting down, hopefully, that if we come to here, drop this in as we talked about, come over it. Now, there is one good thing that we're going to talk about, but we got to talk about some of these earnings, obviously. If we take a look at how that's shaping up, all you did was come to the low end of the channel and bounce. And what this is this is a retest of 4,200. So we're getting all warm and fuzzy about something that I think we need to slow a roll about. But there are some things out there that were pretty good today. And let's blow this up and let's clean up all my lines and let's get really in here. And I think we have to be very specific about what's going on. I'm going to get into some of the private cloud system that I use just so you can see where you're at. But this was the line that we were showing in the Alpha Chasers community today, and we were just talking about it. Very simple. I mean, it's not rocket science, but you stopped right there. Let's go back to the arrow. Stopped right there as soon as you hit it. A couple other names stopped right there. Go take a look at where NVDA stopped on that hourly DTL. We're going to get into that as well. So are there things here that are developing that are of interest? Yeah, there's a couple things here that are of interest. That doesn't mean that we're going to hold, but let's point them out. So first and foremost, if we just come here and we go left shoulder, head, and make this the right shoulder, you can see that very clearly in there, right? So you have this little bit of an inverted head and shoulders. And I do like the fact that you're starting to slope down a little bit like this. And then all of a sudden you're getting this kind of move. I'm not knocking that. I mean, I'm happy to see it. I would rather go higher. We're just not going to go higher right away with everything that we have going on out there. I don't think that's realistic. Now, I don't really want to be the harbinger of bad news, but you can see where we are here and you can see where you are here. And we're already overbought. We're already overbought on the hourly on the RSI. Again, this is not where we want to be. If we were down here and we were butting our heads, you would say, oh, we have way more to go. Now, this is not the be all end all, obviously, but this can only go so high. And if we know that, and we look at past experience with it, let's just take a look at this for a second and drill down into this just for a moment before we get into some of the really specificity. And just kind of mark these off and say, well, did it work in the past? And working in the past is the best indicator that we have that's going to work in the future. We really don't have anything better. I mean, that's pretty much all we have. And it doesn't mean that it's just going to go automatically down and implode. But when you see something over and over again and it works, like when you have lows and it bounces and lows and it bounces, you want to pay attention to it because there is something to it. And it's certainly something that we want to pay attention to. Looking at this on a 4-hour, and what we'll do is just mark these off real quick and just take a look at this and say, okay, is there anything here that's of interest that we have to pay attention to on a 4-hour? Well, yeah, I mean, we could say that when this is overbought on a 4-hour, that could be something, and that's going to take some time because we're certainly not there. So maybe that's something that we could work with. Or are we going to hit one of these points like we've done in the past repeatedly where we hit one of these levels and then we get something like this? And we don't know if we're going to get that or this. We just don't know yet. But you can see how either one is viable and either one could happen. So I think we just need to be really careful here. Now, after hours, as far as earnings, we're going to have to dig into some of these numbers so that people understand them a little bit better on what happened, specifically for solar, I think. But if we, let's clean all these off and we'll start from there. And I appreciate you guys talking to me in the comments and telling me just keep doing these a little roller. I can get way more content out this way and I can get it out faster. I see this right here. I see this positive divergence. I think it's pretty obvious to everybody that it's there, but is that going to be enough, or are we going to get right to that line and stop? Because we keep getting to the same lines over and over again like it's Groundhog Day. And I'm sure you guys already saw that, but it's right there at that 14.5, and then you just hit it, and then what happens? You just get Matumboed over and over again. So we're rallying to these levels, and we're not breaking, and that's an important distinction, isn't it? You get right to those levels, and then we're just not able to get over that. This should be a positive thing, and it's not, right? We're already higher and we just can't get there. This should be leading and it's not. Now, does it tomorrow? I don't know. I mean, are we going to achieve, is Japan going to figure out their bond problem overnight? Is Israel going to figure out their issues? Or is all this baked in? I don't know how all this is baked in, candidly. And maybe I'm wrong. Maybe it is. But if you kind of see the slope of that line, how we're doing, we've cracked. Should we get to this neckline and test it? We should. We should get to this neckline. We should test it and we should go from there. I would argue that today's volume was really light and not something that I'm going to get all excited about. And if we drill into this, what are we going to see? 1, 2, 3. We're going to see levels that we should be paying attention to, right? So yeah, of course I see this where, let's make that an arrow again. Of course I see this where we're in a position where we keep bouncing off that oversold and every single time it's doing great. What I don't want to see is what I'm seeing today. And this is really something that is a negative divergence, and you really don't want to see this. You don't want to be making lows when the RSI is at the same level. You don't want to be making lows when the RSI is at the same level it was at before. That's not really what you want to do. Is you want to make lows and you want the RSI to actually, or you want to make lows here and then have the RSI not do what it's doing. I mean, I can't really be any clearer. This is not ideal. This is not where you want to be. The RSI should be following this down. And if it's not, you want it to be shorter, not worse when this is dropping. So I hope I made that abundantly clear. You really want to see something like this, right? That's what you want to see. You want to see where you're making lower lows and then this happens. Okay, that's how you put a bottom in. This is not how you put a bottom in where you're here. Let me highlight this and show you, because this is really important distinction. See where you're at right here, and then here, and then here. You see how all three of these are basically the same level. This one's actually a little higher. That shouldn't be doing this, right? In other words, you'd want to be in the same line. You don't want to be lower with the RSI where it is here, because that usually means that there's more pain. Whether or not that is remains to be seen. And everyone getting giddy because we didn't fall apart today is probably not ideal, right? I mean, like, we're setting the bar pretty low, guys, that we're getting a little excited because everything didn't implode for one. And that doesn't mean that it doesn't tomorrow and that we don't have issues. Now you have Apple this week and some other earnings that we obviously have to watch. I would not be feeling great about how this played out today. I think if we just put the most basic of indicators in, get rid of the RSI, and just put the most basic of indicators in here. My 12 is screaming down. Let's get rid of these for a second. Screaming down. The 22 is down. The 55 is down. This is getting worse. It's not getting better. You don't miraculously turn around and everything's just, peaches when this happens. It doesn't work that way. So we're going to have to work this off, find a base of some kind and go from there. I keep hearing the same thing. This is a cup. This is a handle. I see it too. And I would be thrilled to death if that's the case. But I'm not so sure that it's going to be that easy. You need, we can all look at technicals, and it might be time to break out the stool. I feel like my father, don't make me bring out the stool. But see where we're at here, macro fundamental technical. So the way that I look at the world is like this. You have 3 points that you have to pay attention to. Everyone just says, oh, look at the chart. It's just like before. It's this. Okay, there's more to it. This, and this are all parts of the market up here. If one of these is not doing okay, that's okay. And then the other one will lift it up. So if macro is a disaster, then we're okay as long as earnings are going higher and the technicals are holding. If earnings are going higher, we're great. That's not really what we have going on this season. And we're going to talk about some of these blow-ups, and we're going to talk about some of these names that are doing very well. That's not really what we have going on here. So we have macro that is somewhat of a disaster out there with what Japan's doing in the war. We have the fundamentals out there that are really not knocking the cover off the bar. A matter of fact, the amount of revisions to the upside is actually gone negative for the first time all year, and that's not what you want to see. And the technical picture, it's not ideal. So keep that in mind. That's something to pay attention to. But I do see this. And I do get it, and I do see what people are talking about. So I don't want to ignore it. I don't want to pretend that it's not there. It is there, but so is this. And right now, me drawing lines on a chart, this trumps everything. And I'll be real clear about how I view the world so that you get it. Whether or not you agree or disagree, you just comment below. But moving averages, they are lagging indicators, sure. But they do tell you where people are doing what they're doing. In other words, if my 55, I use a 55, some people use a 50, you should use what you're comfortable with. But my 55 is telling me that institutions are selling. I use that to determine institutional sponsorship. And I'm sloping down. Again, shouldn't make you feel warm and fuzzy. It's not something you want to see. I'll show you what warm and fuzzy looks like since I have all these out right now. That's what warm and fuzzy looks like. It's not this. Warm and fuzzy would be if we were going higher, which we are not. So keep that in mind. I can't unsee it, right? So it's definitely something that you want to pay attention to. Stocks. Does this look like something you need to rush into? Look at how we peaked last time. Let's get rid of these dividends. And the not having to edit this stuff is just awesome, guys. So you see that pattern? Very similar here. Watch this on the weekly. Okay, is it the same? Not yet, because you held. But here's your break, your rally, and your break. You tried up here. Is this the same situation? No, it's not the same situation. Why? Because we had $1.7 trillion in here. We don't have that. Could we hold here? Yeah, if you get buyers, because now you're not fighting the Fed. If you were buying on the way down, you're fighting the Fed because the Fed went away. So this is something that's of interest, but we're not really holding. Now, AMD came out tonight, and we're going to talk about this in a second, but if AMD does not hold up tomorrow, which it may or may not, we're going to discuss that. But if it doesn't hold up tomorrow, what do we have left that's really going to hold up the stocks after some of these earnings that came out? Because they're just absolutely crushing some of these names like ASML. You never came back. You've never, here, look at this, okay? You've got death crosses on some of these names. That's when the 55 crosses the 200. People use a 50. You should use what you're comfortable with. So we have these kinds of names and we're looking at them going, okay, well, that doesn't make me feel, again, warm and fuzzy. So what's going to do it? Is it going to be Lam Research? Okay, I'm hanging on by my teeth there, guys. And I had a good quarter. KLA, maybe it's KLA. We're still below the 55 there. Maybe it's AMAT. Now we're below the 55 there and we're clinging to the 200-day moving average. Okay, so my hopes are in Intel because Intel's over the 55. I mean, my hopes are not in Intel. So they're really falling on AMD right now, but AMD's below the 200 and below the 55, and I'm setting up a death cross. And everyone's getting excited because it bounced $4, but at the end of the day, what did it really do? It's flat. So what they did was they came in basically in line to beat a very little bit. They sold them about $4 after hours. They had a conference call and they said, oh, things are going to be better next quarter. Okay. And we're not going to see things get better next quarter, in my opinion, for CPU demand. So GPU demand needed to kick up. They really didn't get that into it the way that they should have, in my opinion. I always re-listen to these conference calls when they're significant more than once, so I will listen to this again. But you could see very clearly when they came out and started the dog and pony show, what would be bothersome to me, and what would be bothersome to me as someone that's filming this and talking about it now is that's where you closed. I can't get over that close. Now, I can get over I could put a VWAP on this and get over all that, but I can't get over the close. That means the people that bought it here, all they're doing right now is saying, I don't want to hold this overnight. Now, how long does this hold on tonight? I don't know. I don't know if this holds on, this pendant holds on and breaks out or not, but you can't even get over the opening bar and get over that level. And I think that's extremely telling right now. And this is definitely something you're going to want to watch tomorrow. It's certainly something you're going to want to pay attention to. But if we get into these names and we're going, well, no, this is fine. Is it? Are they going to come out and defend it tomorrow, the investment banks? Maybe, maybe not. So I'd like to spend some time on the earnings so that you can understand like where my head is. The NVIDIA news that came out today, people are like, oh, well, that's not real, that China is not going to get those $5 billion for the chips. That's not my issue with the Wall Street Journal article. My issue was the timing of it was just too impeccable for people to get in. We actually shorted this today and did quite well off the open, but even that was like a half position because frankly, I don't trust anything about this market. Look at what's going on here with Lattice Semiconductor. Do semiconductors look like they're knocking it out of the park right now? Cleaning all this off, I've got a death cross. Does that look like that's something you want to jump into? Here's another one that came out this week with earnings. I mean, guys, look, I'm not here to make it sound like we're going to go this way, we're going to go that way. If you've been watching this channel for some time, I appreciate your comments and I appreciate you sharing this. I talk about what's actually going on and then how you can benefit from it and utilize it to make money and develop a skill set. That's what all these videos are. Okay, so if you're looking at the names that came out with earnings, this is what you're dealing with. Lattice came out with earnings. Okay, these names are down double digits. And I'm supposed to get excited because AMD is not falling apart. It's really hard for me to not get excited about that, right? If we take a look at NVIDIA, the one thing that I kept preaching today with this, and I did try a couple times to get back in this, and it just really didn't work. Let's clean this off for a second and drop this in on hourly. And this is the one thing I kept like trying to point out to people. Let's get rid of the pre and the post. And just watch this line tomorrow, guys, because you could set your clock by it today. I mean, it was pretty glaring, but you have one DTL here, which is a downward trend line. And then you had another, which is a little tighter and more of a mini one right there. And what I was showing this morning, well, late afternoon actually, was when we hit in here. And I was saying that we were setting up to hit in there, and I can actually pull that up real quick. So what I was pointing at here during the day, a trading day, was like, hey, you're heading into these. So if you're long, you don't want to be long. My bias with this was actually short for the day. It worked well off the open, but that was really it. And then you can see there, and you can see how it goes after the fact, and that's why I always put these timestamps in. And then this is me talking about how smart I am. And then these are just other notes about CAT. There was a huge seller out there today. But I don't want to get too much into that. What I want to do is when I say things like that, I like to point it out. So can you flip that? Sure. I mean, maybe you come out tomorrow and you get some really good news. I don't know what that really good news is going to be on the forefront of the Fed meeting. I mean, I really don't know what we're going to get on the forefront before the Fed meeting. Now, I do want to go through this because I think this is worth everyone's time, and we're going to address this tomorrow and see where we're at on the pre-market live call. And they are public, but this is like a private cloud system that I use. And I think this is somewhat important, so I'm just going to point it out to people. And if they're in the room, if you're in the room, you already know, but just watch this because you're starting to turn green and you're starting to hold that 4180. And so that is interesting that we're doing that into the call. We already know what the call is going to be, right? We already know that they're not going to raise rates. What I'm having a real issue trying to wrap my head around here is why did they gap down the bond market as if you had buyers when we clearly did not have buyers, and you gap filled today? Now, why would you do that? And Japan, what Japan just did, remember that video that we did July 27th, for those that have been watching the channel for a while, this all kind of comes together, doesn't it, right? This is where they were in July, okay? And then we kind of played around, and then they started selling bonds again. Why'd they start selling bonds? Well, they started selling bonds because Japan changed its monetary policy. You had that whole article we went over yesterday. Well, they changed it today. And you're telling me now, even though they changed it, we're going to go higher. Now, even though the dollar's starting to rally again, the ES is going to go higher. I'm having a tough time. As much as I'd rather be bullish than bearish, I don't have the earnings to support what's going on. I don't have the earnings. We're not knocking the cover off the ball. Right? Caterpillar, this was the easiest short at the end of the day. The seller had to get out. It was really easy to pick off, like a quick trade. I mean, seller had to get out of this for whatever reason. Caterpillar, does that look like something that you want to jump into? Look at Ford. Did that get better or worse recently? I mean, when you start looking at the way that we are losing sectors, look at how let's get rid of the fib levels there. Look at how we're losing the insurance industry. So we're starting to look, these people say, well, Progressive. Well, did Progressive finally, maybe that's the key. Something like that. Maybe it's going to be specificity, but we're not really knocking the cover off the ball. I mean, here's the blow off and where they got out of Microsoft after earnings. Are they selling after earnings or are they buying after earnings? Here's JP Morgan with a great quarter. What'd they do? We'll get into this on Saturday in greater detail, but when you start connecting all these dots, all they're doing is using earnings for liquidity. All they're doing is using earnings so far for liquidity. They're not building positions. The only one that we really can say that we've seen them do that in the big names is we've seen them get involved with Amazon because it was so much better than expected. They got really involved with Netflix because they really, sandbagged the quarter, and that is hanging in there. So if you're trying to figure out which way we're going, there's a couple names that make sense. The Amazon, the Netflix. Yeah, we're seeing some support in those names. Here's your 12-22 cross. I use a 12, a 22, and a 55. You should use what you're comfortable with. So yeah, we're seeing some support there. Okay. All right. So what else is going on? We'll get the one overs. All right. So we have like DEC, and that's breaking out, hitting all-time highs. Do you want to be up here buying that? I'm not so sure. Watch a net. Right. So this is a net trade looks fantastic, but when you come out here on the weekly, and let's just clean that all off, I got a couple issues already. So here's the resistance, but then here's the upper channel. So I'm looking at these names and going, okay, well, what's going to work? Well, Zebra had good earnings. How did that go today? Because they were really good earnings. Okay, so how did that go? Not really very well. So when I'm seeing this is the kind of stuff that you need to pay attention to. And when you're just seeing systematic selling all day long, where they're just trying to trigger you to get you in, you need to pay attention. And that's what we're seeing right now. And that's where, we need to see. And we're seeing blow up after blow up. Look at this. I mean, sure, this was a bad quarter because they missed on the rev side, Paycom software. But I mean, talk about taken to the woodshed. This you're at 168 right now. You close to 250, you're going to be down 100 points. This is the kind of thing that we're seeing after hours. Match.com, lower revenue. You're down past 32 already. So we're not seeing the growth. Now, I'm not saying that they're all like that. You can see like where you have like Caesars Entertainment, which had very low expectations on what they're doing. So we are seeing some of that. First Solar's trying to rally. But I think when people understand that quarter, I don't think they're going to be too crazy about it. At least I wasn't when I read it. But we'll see how that comes out. And then you go into Wednesday morning, and you've got some big ones tomorrow morning that can move. You're going to want to see how this plays out with Estee Lauder and how that's going to affect Ulta. And I'm more interested in throwing the names out than anything right now. But I do want to point some things out with the index that you need to be aware of where we are in the pecking order. So you have these names like Ulta. Are they going to hold if Eli, or if EL breaks? There's ELF. Everyone kept talking about how great this looks. Does that look great anymore? Okay. And what's happening? Well, I've got earnings tomorrow. Okay. Does it look like people want to be in or out of that stock ahead of earnings? Right. This is what we're dealing with now, guys. And the game's changed, and we have to change with it. I think that's a really important distinction. I mean, look at XLY. Does that look like something you want to run into? You closed below the 2023 anchored VWAP and the 200 SMA. These are facts. This is what's going on. And I think that's a really important distinction for us to make. Now, I don't want to make these too long, but there are a couple things I just want to point out that we've followed during the week and we should be aware of. So number one, if we look at stocks under the 50-day moving average, you have not hit rock bottom on that level yet. Okay, if you come here and you look at stocks above the 5-day, you need to pay attention to this, okay? When you're down here, you're putting in a bottom, a short-term bottom. When you're up here, you're not putting in a short-term bottom. Simple enough, right? Look where you are today. You're at a 73. When you get to a 90 or those levels, that's usually when you have sells. So you're very close to being overbought according to the 5-day moving average already. All right, that's a really important distinction. And then you look at where you are with the 200-day, and you're nowhere near that trough level that you were in October. So to me, besides the overbought, and this is really what I was trying to hammer home, look at the 50-day. You're nowhere near a bottom. So what I'm really trying to hammer home here is on the short term, you now have 75% of all stocks that are above their 5-day moving average. This is telling you that we're probably going to rally, maybe a little more tomorrow or the next day, or into the Fed, and then we're going to have to watch what happens. Now, in regards to the Fed, and we will cover this tomorrow, but if you look at the index and you look at the chances of them raising rates, the chances of them raising rates are very, very little. Okay, chances of them cutting rates are very, very little. So what you're going to want to do is you're going to want to watch the index, not at 2 o'clock, but you're going to want to watch what he says at 2:30 and then how the market reacts. If you're going to extrapolate out today and you're going to say that this was great, what a great day it was, look at how things rallied. Okay, my advice is to go back and just look a little bit longer term at how this market has been acting and what you're actually cheering about. That's it.